the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Asian markets have opened up a bit mixed. Taiwan index is holding on to gains of 0.6%.
If a company received an approval under this scheme, then a $35,000 imported car would cost an Indian customer around rupees 36 lakhs.
On the Nifty, we need to break above the high of 23,050.
So we do see better times ahead for Butterfly.
About 0.2 lower on the Nifty, about 0.5 lower on the 0.3 lower on the Nifty Bank.
Large caps are concerned, we would, the way we look at our consolidated equity valuations, I think it's back within the fair value territory.
As sector are required to grow if the Indian growth story has to continue.
That means almost all consumers in China are either entrepreneurs or work for an entrepreneurial firm.
The mid-cap index was actually up more than about 0.5%, and now it's down nearly about 400 points.
Exports are growing meaningfully at 15 to 20% rate.
The FTSE, based out of UK, will come out with the list as far as the semi-annual index review is concerned.
What has been a directionless, lackluster, uninspiring week, we are finally seeing some action.
Good afternoon, hello and welcome to Closing Bell. We're coming to you, of course, live as always from the CNBC-TV18 Motilal Oswal studios. And Surabhi Upadhyay with me in the studios today is my colleague and friend Nigel D'Souza. But beyond the cheer that we have, because it is Friday, market's not a very cheerful place today. It's disappointing for the bulls, and it's also disappointing because that mid-cap hope that was building up in the last couple of trading sessions, that seems to have fizzled to an extent today.
Well, not too bad, Surabhi. Not too bad, I'll say, because this Friday is at least okay, compared to what we were seeing last Friday.
Oh, that was a full sell-off.
And if you'll say last 12 sessions, the Nifty has ended lower by, in 11 out of the 12 sessions. But still, it's not too bad. And I'll say that because in even today's trading session, the Nifty went to that crucial support, which is 22,720. That's the level we went to. And this level is very, very important. That's the crucial level that you're looking at. Otherwise, you could easily see another 4% that gets taken off from the Nifty from here. And we started with a single support. Then we called it a double support, triple, quadruple. Now it's quintuple. Because today as well, we have gone to that mark. So in the last 1 month or so, the quintuple lows is what we're looking at. Quintuple times we have gone to that particular mark and we have bounced out there. And the bulls, they're coming into fight at that mark, should be. And stock-specific action continues, right? So the Nifty is down 150 points or thereabouts. But for the week itself, both the mid as well as the small cap indices are up close to 1.5%. So there is some pullback. And select stocks, I think you had pointed out in the morning about Religare. The stock has now moved to the high point of the day. So the news came out, but it's building on to gains as we speak. The auto space, that's a space that's very, very nervous with regard to tariffs, with regard to reduction of duties, and how much can it earn, can it hurt some of these automakers. But, if it doesn't play out, those fears don't play out, I'll tell you what, this could be one of the best buying opportunities. Mahindra & Mahindra, I think from the top, the stock has lost 15 to around 20%. So that's one of the big, nervous stocks for this week itself.
Oh, yeah, and big volumes on M&M on this decline today. And M&M itself has been testing its 6 months trading lows. And we're very close to those levels of around 2,700 thereabouts on Mahindra & Mahindra. Pull up a 6 month chart on M&M. Let's see, because today the volume action, price and volume action is pretty significant on the downside. So that's the breach of the 6 month zone. But let's see, there's still an hour to go. Whether it's a decisive breach or not, we'll ask the technical experts as we go along. But it's a weekday. There is no taking away from that. If you look at the large cap screen, apart from M&M, banks have been a big disappointment today. The bank Nifty is down about 0.9%, so not much support coming in from the larger names. Axis, ICICI, many of these stocks, SBI, all of them are down. In addition, you've got some tech names which have again not really helped the bulls case today. Infosys, Tech Mahindra, many of these names down. Reliance is down. Bharti hasn't contributed. So the problem for the market is that barring metal stocks, which are actually shining quite bright, and Nigel will tell us more about metals in a bit, Hindalco, Tata Steel, a couple of these stocks are doing really well, even Coal India for that matter. So the material stocks, metal stocks doing well. Beyond that, there's not much buzz in the market on the upside.
Well, Surabhi, on Monday morning, I'd given 2 stocks to track this week. One was Vedanta and one is Hindalco. Hindalco, because of the valuation argument, it came out with a set of numbers. The street ignored it. But the valuation, there is a comfort out there. They've said that, with regard to this tariffs, it'll be either neutral to positive for the company. So, I think in this week itself, the stock is up close to around, I think, 7-8%. So it's seen a good run from 600 to 650. Vedanta as well from around 410. It's moved to around 435 because that has the special situation that's playing out there. So both these two have done quite well. But let's get a technical check.
Yeah, absolutely. Just want to point out some names from the mid-cap space, and then we'll discuss more as we go forward, because there is a mid-cap unwind that started again. Look at names like Cyient, Sirma, names like Biocon, Radico Khaitan, Piramal Pharma. Piramal Pharma, for instance, rallied 11-12% earlier this week, and now very quickly those gains are coming off as well. So pressure in the broader market for sure today. Let's go across to Mitesh straight away and understand what you can perhaps do in the last hour. Mitesh, good afternoon and happy Friday afternoon to you. Happy, I think, only if someone managed to short the bounce really well today, but otherwise it's disappointing. What are your trading calls now?
Good afternoon, Surabhi. It's indeed a happy Friday. We went short, but we have some bear spreads on the Nifty because, see, I've not got a decisive break below this 22,800 levels as well. So, you don't know whether you want to short future immediately or you just want to see, have some negative bias positions, which is what you do when you make a bear spread on the Nifty options. And that's the way we are trading because on the index, last many days, we were holding 22,800. Today we are trading below that. But given that we still have 1 hour left, we are like only 30 points below that. So we don't know whether it's a decisive break or not. So we'll wait and watch till then. You need to keep your powder dry. And on the stock side, I have one buy and one sell. Tata Steel is something which I like. It's given a breakout. In fact, metals you were discussing, both you and Nigel, I think is one sector which has an extremely well and still looks strong technically. So Tata Steel is a buy with a stop at 138 for target of 146. And Divi's Lab is on the sell side call. Divi's, I would suggest selling with a stop just above levels of 58.50 for targets of 56.35.
Okay, so those are some sell calls that you're working with. Mitesh, what about M&M? People who hold the stock are now wondering. I mean, maybe they didn't blink till 10% fall, 11%, 12%, 15%, but now watching this fall, they're wondering what to do, book some profit. Or those who don't have the stock are probably wondering, should we enter now? What's your advice?
So, M&M, just if you look at the weekly chart starting from July of 24, there have been about 8 to 9 attempts and the stock has touched levels of around 2,700 and not had a weekly closing below that. I think today could be the day. I think M&M now, unless it captures 2780 again, good chance that we'll see some kind of corrective move. It is one stock which hasn't done that till now. And that correction could take the stock to about 2,500 in a normal case scenario. Maybe if something worse happens, much lower. But I think this will be a breakdown, and anybody holding the stock, my advice would be to exit. And or if you get a pullback to about 2780 levels, still that's an exit. Only a closing above 2780, 2790 will convince me that the decline or the corrective move is over.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's turn our attention to the tech space. And mid-cap IT, well, those stocks are trading under pressure after global IT firm Endeavor cut its FY25 revenue guidance. Vamakshi joins us to help us out with a quick analysis. Vamakshi?
Well, absolutely, Nigel. The guidance cut from Endeavor is really impacting the mid-cap IT stocks. When we look at the, the guidance that was cut, it's cut its FY25 revenue guidance to 8.5% to 9% as compared to 10 to 11.5% earlier. The company said that Q3 will be impacted by weak macros. This does have a bearing on all of these mid-cap IT names, especially since we've seen, stocks like Persistent System surge higher by almost 38% in the last 1 year. Coforge was also up nearly 14% in the last 1 year. In fact, analysts also say that Mercedes' subdued guidance also impacts companies like KP Tech as well as Tata Elxsi. So overall, that is driving the pressure on the mid-cap IT space right now.
Okay, all right, Vamakshi, thanks a lot for that. Prakash, what do you make of mid-cap IT? Anything you like out there?
IT as a pack is likely to actually get under pressure soon. It's begun with mid cap. It will probably even tend to the large cap names, which probably are looking okay right now. But my sense is IT is one pocket that has escaped the clutches, and now it's time for IT to also kind of capitulate a bit. So I won't look at anything at this moment. But at softer valuations, there's a company called Sagility, came into the public domain some time back after the revamp of the Hinduja business. I think if you look at that, at some point it starts getting into attractive territory. It made some highs post the listing. Isn't very off the mark in that sense yet. But I would believe, and I don't go by this, if Accenture comes up with something, I can understand it impacts the large ones, the trends which the large IT companies would have to grapple with. Endeavor comes and tells you that there is still stress. But overall, there is stress, notwithstanding what these companies are doing for Indian companies as well. So I would wait for some more time for the froth to settle, for the, not froth, but for the dust to settle, if you will, and then buy into some of these names. Smaller names. Agility is only one that right now features on my list.
Okay, all right. Got that, Prakash. Prakash, I wanted your view on some of these steel companies. Because steel stocks in today's trading session, they're doing a relative outperformance. And there is this buzz that maybe, in fact, we can see some kind of protection coming in from the government of India. So let's highlight, 5 top points as to why steel stocks are buzzing today. One is we have commentary coming in from Mr. TV Narendran, who spoke to CNBC-TV18. He said they presented concerns to the government with regard to safeguard duties, and he believes that they're taking a serious look at it and they're expecting some good news anytime soon. Most countries, he says, they're looking out for themselves, and India must as well do the same with a long-term view on the supply chain optimization. So he's making a solid pitch out there, and that could be the key reason that the street believes, after we have heard from the JSW group, both Mr. Jindal, Parth Jindal, we have heard from Mr. Jayant Acharya as well. They have made a solid pitch, and they're saying sometime in February it's coming. So the street is likely to think that maybe it's coming in the near future. So that's point number one. Point number two, Trump's tariffs, well, they made the globe nervous, but it could strengthen this domestic ferrous company's plea for protection from the government of India and could force their hand, because if he's going to do something that's going to disrupt the ferrous industry globally, then maybe they'll have to work a little bit faster and try to put some kind of duties in place to protect the Indian industry, because China, they will have to dump their steel someplace or the other. So that's going to be important. Point number 3, Q3 FY25 EBITDA per ton could improve by around 1,000 to around 1,500 rupees per ton on a sequential basis, because the street is factoring in higher volumes. Coal costs could be relatively lower, and margins as well, we could get a bit of a booster shot because of steel prices being flattish or maybe mildly higher. So all those points play out in their favor. Point number 4, there are hopes that global steel prices have bottomed out themselves. Chinese non-integrated steel producers, well, they are earning gross margins of roughly around $180, $185 per ton. That's 20% lower than the 10-year average, and they should be making losses as well on the EBITDA parameter. So that's the hope, that steel prices move up from here on. Another couple of factors that we have highlighted, during the course of February is ArcelorMittal. Well, they painted a better positive picture for calendar year 2025 with regard to global steel demand. And also, we know the JSPL's promoters, they have bought more than 0.5% stake from the open market just in the last 20 days or so. So put all that together, the ferrous stocks are excited in today's trading session. Prakash, what do you make of them, and what's the top pick that you have from me? I think that buzz is getting very loud that something is coming. Hopefully something does come about, because there's been a lot of pre-buying on those expectations.
I do agree. There is an imminent imposition of anti-dumping duty of some sort of protection, which also gives the domestic steel companies the ability to continue ramping up their capacities, especially the likes of JSW, JSPL. They've been investing a lot into that. SAIL has been showing some numbers which are quite outliers, in that sense. So I would believe there is this whole timing issue, and it's a cyclical sector. If you recall 22 December, when actually the numbers had peaked out, the prices had peaked out, actually the numbers started moving down from there. So this is exactly the reverse. The prices have bottomed out. The steel prices globally aren't sustainable at these levels. They will probably start inching up as rebuilding Europe, especially Ukraine and all, will start. I said there's going to be a huge amount of demand, and China is likely to participate very actively in that. So think about the second order effects of these peace talks. And if China were to start taking that so seriously, the production in China will probably get diverted to a lot of these newer markets or consumption pockets which will emerge. So I'm quite bullish, but ferrous, non-ferrous is the choice that you make. But on the non-ferrous side, you already know that. Look at how Nalco and Hindalco have bounced back. I think Vedanta is just at the cusp of that demerger. I don't know when that happens, but today the value that it offers, all the underlying businesses that it straddles are doing exceedingly well or are poised to do well. So I would believe that there's a tactical up move that's possible in Vedanta, but on a stronger, longer-term basis, I would still like Nalco on the non-ferrous side. But ferrous sale probably offers you some sort of comfort in terms of valuation multiples as well.
Okay, got that, Prakash. Well, in fact, my colleague Shivani, she spoke to Tata Steel's MD and CEO, Mr. TV Narendran. He spoke about the US tariff impact on steel sector and also concerns about cheap Chinese steel coming into India. Let's hear out what he had to say.
We've represented to the government for some safeguard duties. We've had a lot of conversations with the governments and they're looking at it very seriously. I think there were a number of queries which we've answered as an industry, as Indian Steel Association. So we're hoping that we will have some news sooner than later, because this is a problem which has been going on actually for almost 2 years. China has been struggling to recover and has been exporting more than 100 million tons of steel, and its impact is being felt. So I think, and now with the actions being taken by the US government, the situation has become even more dire. Things we need to look at. If you look at it from a cost point of view, Indian steel is competitive. India is one of the best places in the world to produce steel, and Indian steel industry, which has invested significantly in the last 10 years, has built very modern and efficient steel plants. The different issue is at what prices are people willing to sell, because if you look at the profitability of the Chinese steel industry, it's pretty much negative. Most steel companies in China are losing money. But in India, the steel industry is largely private sector dominated. So unless it's profitable, it doesn't make sense for the steel industry to invest in new capacity. And steel industry has been at the forefront of private sector investment. So I think it's a matter that we need to take a longer view. India is blessed with a lot of iron ore, and there's a great opportunity to convert that iron ore into steel and make it in India.
All right, so that is Mr. Narendran talking about the long-standing demand of the steel sector to get some more protection against dumping of steel, Chinese steel or Chinese steel that's being routed through other countries in the ASEAN region. Okay, just a quick check back on the market. 123 down, so it's okay. I mean, not too much changing. For the time being, it seems to have stabilized around the current zone. Again, I'm focusing on some of the stocks that are losing a lot of ground in the mid-cap market once again today. Some of the names include the pharma pack. Piramal, we had mentioned earlier, but Piramal is not the only one. Walkout is slightly lower as well. There was news on Cipla this morning, but I don't think that's quite helped the stock. Cipla, the gain also fizzled out as we speak. Prakash, okay, so the other aspect is that this week what we've seen is some of the industrial stocks, power stocks, industrial stocks, defense, one day a week, they all had a flash in the pan kind of a move. One day it was defense, yesterday it was power, today I think all of them are cooling off, but in general PSUs tried to pull back a little bit. In this arena, would you look at picking anything, or is it best to stay away? Power, industrials, PSUs?
So it's, I think stock picking at this point in time will be extremely bottom up rather than top down. And from that perspective, if you look at some of the names in the power value chain, especially transformers, a lot of ground has been undone in that sense. If you look at the overpricing or overvaluation that you had in some very good companies like Voltem, I'm just taking an example. Look where it is in the last 3 months. It's lost so much of ground, but the underlying business, it just got stronger. So when you're talking about renewables to be such a focus area, evacuation of power, transmission of power is going to be something you can't ignore for too long. So this is an area which will do well. I don't think the tariffs will impact the transformer value chain. People in the transmission value chain who are exporting to the US in the last couple of years, at least very actively. So there will be a pickup. But overall, from a buying into the market perspective, I think there's still some ground that the sell-off needs to cover, the valuation needs to temper down. So I would give it some more time. Maybe March is the month when you would kind of start getting some bargains. We're already seeing valuations come off, but the news flow is being used to sell rather than to buy. So that's the mood of the market at this point in time. But so not in a hurry to allocate capital immediately. There's no runaway opportunity that you're missing out on. But lots of work to be done in terms of keeping stocks on your watch list.
Okay, while we're talking about stocks that are down, the ones that are up, some of them are already on your screen, and Power is doing really well. Transformers and rectifiers, it's had a decent week. I mean, today is, of course, a good action. Overall, for the week as well, gains are 6-7%. There's JSW Energy, which continues to chug along quite well. And even beyond the power space, look at EQ Lighting. EQ Lighting is suddenly surging on massive volumes. It's a smaller stock, I think 1,500-1,600 crore rupee market cap. But it seems that there's suddenly a big buyer, 15% up on EQ Lighting. There's Dollar Industries that's moving higher. Subros is having a good afternoon as well, up about 8%. Auto components and auto, Prakash. And before we let you go, I have to ask you this, right? The damage on Mahindra and Mahindra. Even M&M had a relief day. The other day it pulled back a little. Yesterday, I think it was. It pulled back quite well. But, you know, this is serious price damage that has happened on the stock. The verdict is still out. We don't know. Tesla, our colleagues are telling maybe even with the duties, they could come in at 30-35 lakhs. We have to really see. And whether then that really disrupts the playing field for M&M. So what on that? And in general, auto stocks, I mean, what to do with this whole tariff confusion right now?
So I think M&M has been exceptionally beaten down. I mean, if you look at Maruti Suzuki today, in spite of all this talk about, import becoming easier for passenger cars, Maruti hasn't lost much of ground, or so as, the other names which could probably would have got impacted. But M&M has come into this because, the timing of this whole Tesla entry coincides with their launch of the new electric platform. Why aren't we talking about Tata Motors getting impacted so badly? Because, it's like Tata Motors actually sells more electric cars than M&M. So if there were to be any impact, it should have been there as well, but it's not. So what I'm trying to tell you is that M&M needs to kind of get its new launches proven on the ground. And once that happens, things will become easier. And with Tesla's entry, potentially the market only grows faster. What happens is Tesla will also need to back it up with the charging infrastructure. And if the charging infrastructure grows, the public infrastructure grows, I don't see any reason why anybody who makes, a value for money kind of vehicles, which are based on technology, which is very sound and futuristic, won't do well. So I think it's just a question of sentiment. In fact, it's a very good time to buy into M&M because come monsoon, then you'll probably see the tractor segment contribute so brilliantly. And so would its SUV segment continue to do or chug along on the conventional side. So I don't see any reason. It's just that the market needs a reason to beat down stocks. And some of the times what happens is the news flow kind of just helps you do that very easily. But I don't see any fundamental change. In fact, they could probably do a fundraise for some of the group companies which contribute to the M&M stock as well, which is almost like $200, $300 out of this current price is from other companies. And those companies are also likely to do much better. So not something that I would really be worried about. In fact, it's a good time to enter if somebody doesn't have it in the portfolio.
Okay. All right. Prakash, thanks very much for that. We do have to take a quick break. And by the way, have a great weekend. Have a good one, and we'll connect again. Connect again next week. Let's see where we are. Have to take that break. When we come back, we will have Rajesh Kothari joining in of Alpha Accurate Advisors for some perspective on this market. Welcome back. Before we continue forward, just some perspective in terms of how India has done vis-a-vis a lot of other markets today. Well, we've underperformed some of the markets in Asia, which were either flat or positive. Right now, Europe is not doing too much. Wall Street futures, they're also, flashing a little bit of red for the time being. The market to focus on is this one, the one on your screen. The Hong Kong Hang Seng has completely blown past today with a move of 4%. And if you're wondering what today's trigger was, it was Alibaba earnings. The Alibaba listed shares in Hong Kong, they rallied almost 12-13%. And in the US, shares had rallied about 8%. And there's so much excitement about a lot of these large tech giants now reporting improved earnings, not just Alibaba, even Lenovo's numbers, which came out earlier in the week, they were very, very well received. And by the way, now let's pull up that contrast between the Nifty and the Hong Kong market, the Hang Seng. The Hang Seng is up almost 15-16% so far this year. We're down about 4%, so it really hurts. That's Nifty today. We should pull up a year-to-date chart to look at that comparison. That's of course today. Yeah, 12 months, Nifty has not done much. If you look at year-to-date, we're down. Year-to-date, 2025, we're down about 4%, whereas the Hang Seng has rallied. This big tech rally and that meeting with Xi Jinping and the industry leaders, it really seems to have sparked something big and something new. And this is exactly what we actually discussed with Andy Rothman, founder at Synology, on the Chinese market. What is fueling this rally? Is it real? Are more investors going to pile in? Because the dispersion between India and China in the equity market sense is looking fairly significant right now.
I have to wait a little bit longer to see if this is the real deal, but I think odds are that it is. And I say that because things have been getting worse in the Chinese economy, and Xi Jinping is acknowledging that. And what we're seeing now is yet another step in a process of course correction towards pragmatism that's really been underway since September of last year. So it's not just a one-off thing if we talk about the February 17th meeting between Xi Jinping and the tech entrepreneurs. It's part of a process. When confidence comes back that the regulatory environment is improving, remember that there's a tremendous amount of liquidity sitting in the Chinese banking system right now. Family bank deposits, and this includes a lot of very small businesses, those bank deposits have grown by almost 90% since the beginning of COVID. That's a net expansion in savings of almost 10 trillion US dollars. So to put that in context, that's more than double the size of Japan's GDP. So when people start to get their confidence back, they'll start drawing down on that savings. And we could really see spending take off, hiring take off, and possibly the domestic market take off as well.
Okay, so that's some perspective on the China market. And the big question here for India is that if the China market really starts doing well, and the mainland Chinese markets as well, will it further pull away FPIs who've anyway been deserting Indian shores? Well, let's move on and get some perspective going with Rajesh Kothari, Managing Director of Alf Accurate Advisors. Rajesh, before we start talking India and what you've been doing in this correction, actually just your thoughts. I mean, from an Indian investor standpoint, I'm sure you're very carefully observing what's happening in China. And the thing is that even Indian investors, whether it's retail investors or HNIs, suddenly everybody wants a piece of the action. And I have heard a lot of retail saying, okay, which China funds are open? Should we start putting in the money? But your thoughts on whether this poses a new challenge for our market recovery?
Hi, Shruti. I think sometimes access to information becomes your enemy, So narratives plays the role. And from last 4 years, we have seen that. And I think the only lesson to be learned, at least by the retail investors, more importantly, because generally they fall into this trap, is not to believe in narratives and look at the actuals, the fundamentals, the ground reality, and do what you understand the most. Because if you start doing the things which you don't understand, exactly 1 year back, everybody was talking about India, and nobody wanted to talk about China. And exactly 12 months after that, China has outperformed India by 40%. And now everybody wants to talk about China. Same thing is for gold. 36 months back, 24 months back, 12 months back, nobody said invest in gold. And today when I meet some large family offices or even HNIs, they say, Rajesh, should we consider now gold? Gold has already done the best of it. So I think sometimes you need to a little bit sit back, relax, think twice, don't get into the euphoric trade, either side of it. Just analyze two simple things between greed and fear. Where are we? Be it asset class, be it stock, be it equity market, be it India, whatever you are doing in terms of investment. On that greed and fear pendulum, where are we? And it's always better to be a little bit greedy when others are fearful and be a little bit fearful when others are greedy. If you follow this simple common sense of human behavior, at least you will not lose money. I don't know how much you can make more, but at least you will not lose money.
Okay, so don't go into fashionable investing, much like fashion trends, right? We chase whether it's a boot cut that's in or a straight cut that's in. Last year it was India, right now it's China. But Rajesh, you're saying that don't go with what's fashionable, go with what's right. So speaking of that, now let's come to the correction here. First question, I mean, in the middle of the week, we were getting a little hopeful and it seemed like the market is bottoming out. At least that process of bottom formation is on. What do you think? Is the worst of the pain for mid-caps over?
Well, I think from the three different parameters, the trinity of the three things. The first is look at macro. The macro side, the inflation is cooling down, which is good. The interest rate, RBI has done the first rate cut after a very long time. That is good. The banking liquidity is improving. That is good. So first, the macro side is coming to your favor. Now let's look at the micro side. On the micro side, the third quarter corporate India growth, if you look at BSE 500, it has been around 10%, which is not bad. In second quarter, it was just 5%. First quarter was also very low single digit. From low single digit, we are now at least 10%, which is good news. And because of the union budget, 1 lakh crore gift, probably this will now improve. And maybe from September quarter onwards, I mean 2Q FY26, you will see good double-digit earnings growth, maybe 12%, 14%, 15%. So that is basically the micro. So macro is turning in your favor. The micro has already started turning in your favor. And the third part, very important part, is the valuation. Because that's where the margin of safety comes into play. So today, if you look at the Nifty, we are below 10 years average price to earning multiple. Very simple valuation metrics I'm using. Where are we on 10 years average PE? Of course, in last 10 years, ROE has improved. The corporate balance sheet has improved. The digitalization has improved. India rank in terms of GDP has improved. And many more things happened in last 10 years. So I'm not entering into debate, should we trade it structurally better PE compared to what it used to be? But even if you assume that 10 years PE remain as it is, today we are trading below 10 years PE. And it means it's a good time to invest in. Now, does it mean that market will not go down tomorrow by another 3, 4, 5%? Who knows? It can go. But when you have a 3, 4, 5 years investment horizon, I think that if you invest today, at least on the multi-cap perspective, chances that you will make good double-digit returns with a 3+ year time horizon is in your favor. Coming to mid and small cap, yes, there was a valuation froth, but unfortunately, we should stop using this terminology mid and small cap. Because in India, out of 5,000 listed companies, only 100 are called large cap as per regulatory definition. It means only 2% of India is large cap. But reality is somewhere else. Because India's largest fastener company, or India's largest mall which is listed, or India's largest bearing company, or India's largest luggage company, or India's largest plywood company, they all are largest, but they go into mid and small cap because they are not top 100 by market cap. So I think we should stop using these generic terms, whether mid cap looks good or mid cap looks bad. I don't think so. I think the top 500, 600 companies, which are listed part of it I'm talking about, which makes 100 crores plus reported net profit after tax, that's the universe where one should invest starting now. There might be another 5-10% decline, which is possible. I'm talking from 100 to 500 company, 100 to 600 company, but the good pain is already there. We are seeing many stocks are down 20, 30, 40%. We are seeing the correction in valuation, but the earnings growth is now going to improve. Of course, one needs to be selective, and that's the universe we would like to play within. Moment you go out of 800 company, from 800 to 5,000 company, that's where there is a lot of froth. And that's basically what I would say micro cap rather than using the word small cap. And that's a part which is going to be a tricky part because a lot of poor fundamental companies, poor quality companies, poor balance sheet companies, poor governance companies, stock price went up 10 times. So do I see bottom there in near terms? May not be. I think there is a good pain is still left from 800 company to 5,000 company. So 3 buckets, top 100, 100 to 800, and 800 and beyond. The third part is where you need to be a little bit careful. And that, please remember, that's 4,000 companies. So, 70% of market is basically there, where at times you get stuck.
So Rajesh, finally that brings us to the question that everyone has on their mind. If people have some cash to deploy right now, because obviously you're getting better levels, better valuations, where to look? Should they go back to the erstwhile leaders? And we've had that, these flashes in this past week. One day was very good for defense stocks. One day it was some of the industrials that look good. Or should they, look at, safer areas like, say, pharma or banking? Where would you put new money to work?
Where do you think there'll be growth? Because there is no sector which will guarantee the growth. It is a company. So forget the top-down view. Right now, it is going to be more bottom-up. The top-down has worked beautifully in the last 4 years. But from now on, for next 18 months, focus on the stock-specific. Let me give one example. There are broad headlines in newspaper that Indian consumer is under stress because India's largest FMCG company has reported 2% growth. But if you look at the India's largest retail company, is also the consumer company, has reported 40% growth even in third quarter. So consumer is not under stress. You need to be relevant in terms of product. So what I'm trying to say is that, for example, in consumer space, we prefer discretionary. In capital goods, we prefer power capex rather than road capex and railway capex and defense capex. In automobile and auto ancillary, we prefer more auto ancillaries. In pharma, we prefer more CDMO and so on and so forth. So every segment, you need to further do the micro segmentation and pick your winner, which is a growth, ROCE, and cash flows. These three things are most critical, of course, provided the valuations are reasonable.
Rajesh, have you made any portfolio tweaks in the fall? Maybe you can't talk individual stocks, but some idea in terms of how much has the drawdown been? Have you altered your strategy in any way?
Basically, our strategy is causality. Be quality conscious in what we buy and be agile enough to get out of it. So discipline exit strategy is always our key differentiation, and we keep doing it, whenever we think it requires. So say, for example, capital goods exposure, we have reduced by about, 300 bips, 3-4%, because a lot of stocks have went up through the roof. So good amount of profit booking, we have done. In last 6 months, we moved more into pharma. So pharma is right now almost 9-10% of the portfolio. Specialty chemical, after 4 years, we are liking it again. So from 0%, almost 0%, we are right now about 3.5-4%. Banking and finance, we have increased, a little bit within banking and finance. We like the largest consumer banking finance company. Again, we made it almost like very low. And from that low exposure, we are now back to 3%. So likewise, so every sector, wherever the valuation have already discounting next 3 years earnings, we are basically have reduced, taken profit on the table. And wherever we think from here, we are seeing next 2-3 years going to be very, very solid growth. That's where we are putting money.
Okay. All right, Rajesh, we will leave it on that note. Thanks very much for joining in. Appreciate that perspective today. Well, we do have to take a very quick break on that note, I think. Yeah. And we'll come back on the other side. We'll, of course, have the latest from dealing rooms. We'll have Nimesh joining in on D Street Chatter. And then, of course, some final trading calls coming up with Nitesh as well.
Welcome back. Well, the markets again go down to around the 22,720 mark, and we're bounced off there. And the Nifty Bank, that's still protecting the 48,800. So it appears both those two levels extremely crucial. Nimesh joins us to help us out with what he's picking up in D-Street chatter. Hi, Nimesh.
Hi, Nigel. A bit of a pullback. So clearly the bulls are looking to fight it out, and 22,800 seems to be defending at this point in time. So that's a very crucial level to watch out for, I guess. But today the fall is largely dragged by a couple of sectors. One is, of course, the IT names which are under pressure, and the other segment is the pharma names. So both these two sectors are the big culprits of dragging the Nifty largely down in today's market. Flow seems to be quite mixed. So there is no big, big sell-off, so to speak, or a rather big buying as well. So it's kind of a mixed day as far as flows are concerned. A bit of selective buying is back in the PSU basket as well. But I guess, the important level to watch is 22,800 on the Nifty. And remember, we have a truncated week next week and also the expiry. So if the Nifty sustains about 22,800 levels, the feedback is that you might see a bit of a short covering as well, because in many stocks there is a lot of shorting happening as well. So watch out for that level of 22,800 on the closing basis in today. But I guess from a flow perspective, it's largely a mixed day. But the big sector to drag is clearly IT and pharma.
IT and pharma. Okay, got that. Nimesh, what about individual stock names? What's the action? What's the buzz you're picking up?
Well, the first name on my list is BSE, Bombay Stock Exchange. The stock is well down 2 or 3% in today's market. But the last couple of days, there is a bit of buying interest is back. There was a report about a large, global fund buying. I also understand some domestic mutual fund has been accumulating BSE at these levels. So that's the first stock. Though in today's market, there are buy flows, is what I understand. The second name is NHPC. We saw a big move yesterday. Even today, there is a follow-up buying, is what I understand from larger FIs. So after a long time, some bit of buying has emerged in stocks like NHPC at lower levels. So that's the second name. The third stock is Indus Tower. Every now and then there is a sense of some supply coming in from larger FIs. So again today there are aggressive sell flows at a leading FI desk, and looks like some large FIs are sellers in Indus Tower. And the last is Trend. Even Trend seems to be under pressure today, but there are buy flows which are emerging. So I understand the leading long only fund is an active buyer in Trend after the massive correction we've seen from the top. But again, there is a bit of short in Trend, so watch out for if there is a potential short covering next week ahead of the expiry.
Okay, all right, got that. Nimesh, thanks very much for all the chatter today, and of course through the week as well. With that, let's quickly head back to Mitesh and take some final trading ideas and calls. Let's get the screens up as well. It's actually looking good. That quintuple bottom, as Nigel has been talking about, 5 times testing the zone, and the bulls are fighting back. 22,800 is back on the screen. It's really saying something for the zone of 22,700 to 800, right, Mitesh? And the mid-cap index also trying to cut the losses. What are the trades now?
That's exactly what I was saying. Don't go short in the future. You're still not short of a proper breakdown, even you're short of a reversal. So I think taking option spreads would be a good idea till then. But yeah, I think we'll wait it out on the index. But on the stock side, I have a BTSC and one estimate. So on the BTSC side is Coal India, trading near the day's high. The stock on the hourly charts is showing some kind of reversal. So BTSC here will stop at 367.5 for targets of 375. And on the selling side is Dixon Tech, or SCBT on Dixon Tech. Keep a stop just above the levels of 14,100 for target of around 13,750.
Okay, all right. Got it, Mitesh. Thank you very much for the trading calls. You have a fantastic Friday and a great weekend, and see you again with the markets next week. Well, with that, let's move on. Nigel has actually hopped across to the wall to tell us about what's brewing with Vedanta. Now, we all know that the company soon will be looking at a demerger, and 5 separate individual independent entities will come to being. What can this mean for shareholders? Nigel, over to you.
Well, that's right. There is a special situation playing out in Vedanta, and it could possibly be a case of re-rating. Let's break this down for you. Well, this week, the shareholders and creditors have approved Vedanta's demerger plan. And the management expects the demerger to conclude by the end of Q1 FY26. Remember, the board had approved the demerger in September 2023, and the company has already secured the NOCs from the exchanges. Now, post the demerger, the existing shareholders will receive 1 share each of the new entities, and this will result in 5 listed entities with separate focus on aluminium, oil and gas, power, steel, as well as iron. Now, the existing business, the existing listed company, that's Vedanta Limited, will house the domestic and the international zinc operations. They'll also house the copper business. Now, the demerger will allow each business to focus on its core strength so that it could offer near-term potential unlocking of value and also maybe a re-rating of sorts. MK, for one, they believe that investors would be more bullish on Vedanta Limited, Vedanta Aluminium, as well as Vedanta Power. On the valuations front, well, the current listed entity that trades at sub 5 times EV upon EBITDA. That's assuming EBITDA of around 50,000 rupees, 50,000 crore rupees in FY26 and a debt of roughly around 60,000 crore rupees. But the demerged entities, well, they could command a higher multiples on an EV upon EBITDA basis of roughly around 6 to around 7 times, depending on the nature of business. Bulk of its value, though, comes in from the aluminium business. That's because it's well placed. It's focusing on higher captive sourcing of alumina, coal, as well as bauxite. That's what could lower the cost of production from aluminium and thereby better EBITDA. Vedanta Limited, well, that will house the zinc businesses, which includes the 63% stake in Hindustan Zinc and also the international zinc business. But keep in mind, there'll be a mild negative value as well that you'll have to ascribe for its copper operations since it's shut. Its oil and gas, power, iron, as well as steel businesses, all of them will get a multiple of roughly around 5.5 to around 6 times thereabouts. Therefore, the sum of the enterprise value of the individual businesses will be approximately 2.7 lakh crore. That is higher than the existing EV. And X of the net debt in books, there could be some potential upside for equity shareholders as well, as it's evident on the screen. All of this should play out in the next few months. Hence, there's a special situation playing out for Vedanta, and that's why the stock could relatively outperform its peers in the near term. So let's see whether or not there is some value unlocking that is remaining for shareholders.
Okay, all right. Indeed, Vedanta looking quite interesting at this juncture, given that special situation that has arisen. Let's move on and welcome in our next guest on the show. Jay Bala of Cash the Chaos is joining in. Jay, hi. Good to have you on. We all remember last time you said that, yes, there could be a bit of a bounce in the market. There could be some respite to the bear attack. But before we talk about, what your view is now looking at the week, I want to start by what you're making of this non-stop Hong Kong rally and, the serious amount of money that's pouring in over there. It's not just the Hang Seng. I think the Hang Seng Tech Index is the one that's really leading. It's up almost 70% in the last 1 year. Individual Chinese tech stocks are rallying 50, 60, 70%. What do the charts indicate? Is this just one of those flash-in-the-pan China trading moves, or is there something more?
See, I am seeing the I've been bullish on the Hang Seng Tech Index since 2023, so this is a bit delayed. But in the medium to long term, this is only a corrective bounce to me. As far as including the China mainline index, that I'm not that bullish on it. I'm anticipating that to peter out quite soon. In fact, when one of the fund managers in the US said we'll buy everything, I told Prashant that he'll probably be making money in the short term, and the Hang Seng Index, the Shanghai Index is likely to drop to somewhere close to 2,200 in the medium term before a bottom is put in place. So this is a temporary rally. I don't see this as a sustainable move. I don't think the Indian markets are falling because money is moving to Hong Kong and China. It's got some, its own, endothermic reactions.
Okay, all right, Jay, a market participant actually asked me that Jay has been very, very correct. And he's talking about an, medium-term bounce could possibly be on the cards. But what is the ultimate target on the downside for you as things stand right now?
Yeah, that is it's an evolving question, Nigel. At the moment, my objective remains the June 4th low for the large cap index. The mid cap and the small caps have achieved those levels. But the 22,724 that it registered a couple of sessions ago, that's absolutely crucial. Crucial for the large caps. Any expansion below that will lead to possibly a very sharp fall that will probably take the Nifty directly to 22,100 and then later on to 21,280. So 22,700 is absolutely crucial. My preference is for the short-term bounce to come through. It's come through for the small cap index. It's rallied from sub 15,000 to 16,000. But the large caps not responding to support levels and the time cycles at February 18th is a sign of weakness. So I'm a bit, a little bit cautious once again about even the short-term bounce. In January, I'd anticipated the markets to bounce 24,100, but we got a bounce only till 23,800. Even now, we're not even getting that. It's just meandering around 22,700 levels. So I anticipate the bounce to pick up, but let's see how the week closes today.
Okay, all right. Jay, I request you to stay with us. For the time being, we'll slip into a short break. As we do that, here is some good news coming in for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or from the Google Play Store. Or you can scan the QR code that's up for you on the screen.
Welcome back. Well, let's continue the conversation with Jay Bala of Cash the Chaos. So, Jay, now let's come down to strategies. Till there's further clarity on, what is the counter trend move, how long does it last or not? What are the interesting stock ideas that you're working with right now?
Yeah, I'm staying with the broader market, Surbhi, and with that said, you just want to attempt at the cash register ringing. So you might want to reduce your positioning to 1/10 of your usual allocation because both these are bullish sides. And the first one is Vijaya Diagnostics. probably some of the bulls and bears needs to get some admission. And so, jokes apart, I'm anticipating this to do well as long as it can hold above 814. So bullish view on that. And the second stock is Stuffcraft. It's once again a mid-cap stock. As long as the stock can hold above 675, it looks bullish. The run-up from the early part of last year looks incomplete from a price structure point. So as long as 675 can hold, I think it'll probably make an attempt to fresh 52-week highs.
Okay, Stuffcraft, got that. Jay, also, all that glitters has been gold so far. And gold has been a big outperformer. But you're calling for a near-term pop? A peak out there, and then you believe that both gold and silver are headed lower. Tell us levels out there.
See, gold is just a corrective decline, and it's probably very close to this leg of the move. And I anticipated gold to start correcting from 2850 to 2880, but it's slightly exceeded that. It's come to 2900 and plus. Probably. From a medium-term perspective, we still have 3,200 objective, but we could see COMEX gold drop to somewhere close to about 2,400 first, maybe even slightly shorter, and then resume its bull run to 3,200. But when it comes to silver, I'm not that bullish on the medium term. The short term, I'm anticipating a drop below $26. And the trigger for that bearish setup will come if international silver breaks below 31.9. Before that, it's just still a potential. I'll wait for the trigger to come below 31.9 with a stop at 34.5.
Got it. Okay. All right. What about crude oil prices?
Yeah, crude is probably completing a counter trend move. It'll probably complete somewhere around 78, 79. And then it'll probably drop below the September 2024 low it registered last year. I'm expecting it to drop to something like $65. Probably that's, usually crude tends to move in tandem with US equity markets. Probably some correction is due for the US equity markets after a little more higher upsides. Once the DeepSeek low registered a few weeks ago, once that's broken, probably crude will act in synchronicity with the equity markets.
Okay, so where does US markets pull back to? You want to give us a level on Dow or the Nasdaq, S&P 500, one of them?
Yeah, just like nothing is getting the Indian markets up, nothing is taking the US markets down. But that's the reason why I'm keeping the low registered for the US markets, the DeepSeek low to break down. So if the Nasdaq were to break below the January low, Nasdaq 100, the spot levels, if that were to go below the DeepSeek day low, I think that will mark the beginning of correction. Once that's broken, there's a deep correction due for it, 35 to 40% drop. But until that point, it's clocking higher highs. We want the low taken out before we can confirm a very sharp drop of 30 to 40% is coming for the Nasdaq.
Okay, all right, Jay, I appreciate you joining in. Thanks a lot for joining in on this Friday evening and, giving us all of those views. By the way, we'll start winding down for the week. Then it wasn't such a bad week, actually. The Nifty, but it ends with a mild negative bias. But the point this week was, even after the pullback we've seen on Friday, both the mid and the small cap indices go home with gains of around 1% to around 1.5%. So that's good. With regard to today's trading session, well, we at least managed to protect the 22,700 mark on a closing basis. So we have popped off there. Very, only 50 points higher from there. The Nifty Bank as well, it went below that 48,800 mark, but that as well did pull back from those lows. What did well? Religare, one of the big movers today. The Burmans have taken over. That was up 15%. Godrej Industries, good bounce out there. Stock up 9%. JSW Energy up close to around 6%. A lot of power demand is what we have been hearing about. NMDC Steel, SAIL, Tata Steel, all of them going into the weekend expecting to hear something with regard to some duty protection. Let's see whether or not there's something that comes about. Piramal Pharma, from the recent peak, the stock has seen a big correction. Swiggy, that stock goes on with a cut of close to around 3.5%. So big downtick is what we've seen on that one as well. And in terms of stocks, it was a very, very forgetful week for Mahindra & Mahindra stock. Ended the week on hopes that we'll see some kind of positive news flow because of the kind of bookings that we got. The fear is now we're going to see some imported vehicles at lower potential duties. So that's why that one's down close to around 6% for the day. And for the week, it's lost close to around 10% of its market cap. From the frontline names, you have Adani Ports as well, was down 2.5%, and BPCL as well under some pressure. Metals, that was the bright spot for the week itself. That goes home with gains of close to the index goes home with gains of 5%. And in today's trading session, Hindalco as well did pretty well. Well, on that note, we'll wrap up on this edition of Closing Bell. Don't go anywhere. Editor's Roundtable comes up next.